Well, good afternoon, financial professionals. My name is Dan Peterson. I'm president of E4 Insurance Services, and I'm welcoming you to the Brew, Building Relationships Every Week. Thanks for tuning in today. For those of you joining the Brew for the first time, welcome. We like to start our Brewcast with recognizing what today is. Today is April 13th, Wednesday, and it happens to be Scrabble Day, National Scrabble Game. So grab yourself the old game of Scrabble. It's also Peach Cobbler Day. I think cobbler might be a good Scrabble word. So enjoy some peach cobbler with maybe a little vanilla ice cream as you celebrate the national days. Today on the Brew, as part of our advisor series, we have Zach Schnitzler, who is the insurance specialist for Eide Bailly Financial Services, working with Eide Bailly. Eide Bailly is a top 20 accounting firm, and Zach is leading E4 Insurance Services with life insurance production in 2022. So, Zach, welcome, and thank you for joining us on the Brew today.
Yeah, thanks for having me, Dan.
Zach, we're going to talk a little bit about a really phenomenal opportunity that we were able to work on together. And this started last January, actually, if you remember. I remember getting an email from you that one of the clients that you work, that CPA out of your Bismarck office worked with, had been approached. They're a high net worth client. They had already done significant insurance planning as part of their estate planning. And they had a really strong relationship with the CPA that they worked with and estate planning attorneys. They had previously done a significant amount of gifting, and they had been approached by an insurance agent that flew up from Louisiana and was proposing that they create a variable rate bond obligation, premium financing, life insurance strategy with one carrier for $50 million of coverage. Do you remember getting a call about that?
Those are interesting calls to get. And anytime you think of, the typical salesy life insurance agent, I feel like they always have to have a Southern accent. So Louisiana, boom, right there. No, I'm just kidding. But yeah, very, very interesting situation for sure. And working for a CPA firm, we often get brought in on just very wild scenarios, this being one of them, lots of split dollar situations. But yeah, very risky premium finance is out there and getting proposed every day.
Every day. And I remember you sent over a spreadsheet that looked like this, what's up on the screen. And what could possibly go wrong with these numbers? So what was being proposed to the client as part of their estate plan was that they would borrow, if you can look at the screen here, basically they would create debt obligations, a variable rate debt obligation, almost like a bond issuance. And over a period of 12 years, they would borrow or create this debt obligation of $39.5 million to fund a $50 million life insurance policy. What could possibly go wrong, Zach? But this was a real life proposal that your CPA and the estate planning attorneys said, "What? What are you thinking about doing?" You remember that conversation with the CPA?
Oh, for sure. It was one of the wilder ones, and you immediately start looking at some of these columns, and it's easy to figure out what the goals were from the agent, for sure.
So going back to the facts and circumstances of the case, the clients had already used up half of their lifetime exemption. They had gifted assets that had rapidly appreciated, so they their ILET now had, from previous gifts that had appreciated, 36 million in assets inside of the ILET. They already had $30 million of life insurance coverage inside of the ILET. But the estate planning team, the CPAs and the attorneys, were looking at using up the rest of their lifetime exemption before it sunsetted in 2025. Correct? Is that really the gist of the client's situation?
Right. Yep. There wasn't really an opportunity to put more money outside of the estate for the purposes of life insurance. Fortunately, and you don't run into these situations almost ever, the trust itself was plumb full of cash.
Yeah, the trust had, I can't remember a trust with $36 million of already appreciated assets. And the client in their taxable estate, the estate was worth over 160 million. So a significant wealth that they had accumulated with a fairly young spouse, 47-year-old spouse with a 65-year-old husband.
No judging, because that is the first marriage too.
It is first marriage. So these were, and they had young children as well. So, definitely wanted to make sure that they had liquidity in their estate. The problem was this very, very aggressive strategy. And so, Zach, I think one of the things that I saw you do is you really built, I think you call it the round table. You would talk a little bit about that?
Yes. So we are not experts in everything, no matter how much we like to think we are. I am an insurance specialist. I focus on getting coverage in place, having expertise around the insurance itself. Now, for clients of, well, especially this net worth, but it can go way farther down, maybe clients that are close to that, having estate tax problems, net worth, having a round table with different perspectives is so crucial and key. And by, not necessarily coming up with, solutions before we even know what the problem is, I found that attorneys and CPAs can really get on board with insurance as long as it is, going to be put in place to solve the problem. And, the common problem that we talk about in the estate planning world is using insurance, trying to get it outside of the estate to help pay for estate taxes.
So one of the things that we did is it really, Zach, Eide Bailly partnering with E4, is I was able to put together a review of this premium financing strategy, a white paper that we were able to provide back to the CPA and the estate planning attorneys, and ultimately the clients themselves, so they could really understand the risks associated with a strategy that was being proposed. And I'm not going to go through the entire white paper other than to say we will make this available. It is something that we can share, that we will share with anybody on the call who has interest in reviewing this. But it really went through this quote unquote free life insurance strategy or scheme. It's predicated entirely on the policy's cash value accumulation outperforming the cost of borrowing. And it was a very, very leveraged strategy, as you can imagine, when you're borrowing $39.5 million to fund a $50 million life insurance policy. So we put this together, and it really, I think that was part of being at the round table, is that we brought forward a study of what was being considered. And from that, maybe you can talk a little bit about what the estate planning firm, the attorneys wrote another memorandum to the client. So this was January when we started this process. In April, the attorneys outlined from that white paper many of the risks that were associated with the strategy. And you want to talk about that a little bit, Zach?
Yeah, so give props to E4 and Dan for having this service right here, if anything. So this client does not like reading things, okay, at all. And as you can see, this is wordy, but you want a way to get in and with a strong relationship with an attorney or a CPA, these are things that they want to see. And it will make us as an agent look very prepared, very knowledgeable in the subject. And I thank Dan for having this service for us in certain situations, because it helped. The attorney here was one of the most detailed people I've ever met in my life.
Yeah, they really were. They're an outstanding estate planning law firm. They do tremendous work, and they have many high net worth clients like this that they're doing work for. Maybe you could talk a little bit about where we ended up, Zach, and
Yeah.
our recommendation. And you know, after we shared the risks associated with what had been proposed, it was interesting at the meeting because what was the big question they asked? Well, what would you recommend with what we're trying to accomplish?
Yeah. So even, with numbers this big, I have a way of doing things where I still want to keep it simple. So we really started with the question, okay, the CPA said 40 million is a good number for additional insurance. So we used the number based on a recommendation from a person in our roundtable. So trust itself has cash. I ask a very simple question. What kind of return do you need to be able to fund these premiums, no questions asked, without even touching principal? And I believe the answer is somewhere between 2 and 3%. Okay, so simplified things immediately off the get-go. Now, working for a CPA firm, and even how I do things myself pretty conservatively, these are huge numbers, and diversification is key. So what did we look at? We looked at company strength. We wanted to make sure every company that we were using had a Comdex of over 90. And I kind of cart before the horse there, but yes, using multiple carriers, there's reasons to do that, like retention limits, favorable underwriting. But where this really got unique, and we're extremely proud of this, is we truly put in a diversified insurance portfolio. Every product worked differently. One product had a full guarantee on the death benefit. That's some return of premium privileges, but it was simple, pay your premium, guaranteed death benefit. Okay, we had a product that didn't necessarily have a guaranteed death benefit, but had guaranteed return of premium in the future, year 20 through 25. So what we did and that's United of Omaha, a lot of people on the call have probably used that. Because we know that there's guaranteed return of premium, we actually wrote 3 policies with United of Omaha. What if they don't need, this $2.5 million or $5 million policy in the future, but they do need to keep some? They could cancel one of the 3. We have one that was connected to the market, had upside potential if there's growth, but it still had a guaranteed death benefit. And then, because they still kind of like this home run, they like the idea of risk. They didn't mind that huge loan proposal. Hey, can we still do some of that premium finance? And we were able to find, and what we put in place, 1/4 of the 40 million into premium finance. However, in our opinion, a much safer strategy. We weren't borrowing as much. We weren't, using bonds. Company strength was higher. There's a lock feature on the growth. Just lots of things to help really put in place this solution. So obviously it was a incredible opportunity. I'd love to say that these are once a year opportunities. So Dan will have to find another one. But
I agree. Yes.
but yeah, it was great. Team approach, insurance advisor, CPA, estate planner, clients, trustee, and E4 Insurance Services as an expert as well.
Yeah, this is an example, and it may be small for people to see, but in essence, we also showed some out-of-pocket annual client contribution from the trust into the premium financing portion of the strategy. What does that do? As Dale Humphrey talked about from North Star Funding, what that does is lower the leverage ratio, lower the risk of the strategy when you do pay some out of pocket. And secondly, it still showed tremendous upside on that 10. So we had 3 other policies or 3 other companies with 10 million each. This was the 4th tranche of $10 million, so a total of $40 million of coverage in the strategy. But as you can see, by not over leveraging the life insurance strategy with risk, we're actually able to, and with the lock features and other things, we're hopeful that instead of something paid off in 30 some years, it could be paid off in 17 years. And we could see really growth of the death benefit as an additional hedge against inflation or growth of their estate for additional insurance coverage. So it really became a win-win-win all the way around. When we looked at this, Zach, bringing it all to the table, $40 million of additional coverage today. At age 85, we're looking at 54 million in the coverage as illustrated at age 85 for the clients. And the trust will have, with the other insurance and assets that they have, over $84 million of total liquidity. And who knows, the way that this estate has been growing, how much the estate will be worth at that point. But that is one of the highest amounts of total liquidity that we've been a part of as a team, you and I, of working to create that much liquidity inside of a irrevocable life insurance trust.
Yeah, very, very exciting opportunity for all parties. And in the end, we've helped a trust gain 40 million of life insurance.
And if you look, the out-of-pocket expected premiums on the first 10 years, 280,000 for that $40 million of coverage. It created, we had bailout options available, a lot of different flexibility features built into it. And that's one of the reasons why you're leading the pack right now when it comes to production year to date. A lot of that placed this year, and so that was an exciting part for your firm as well, to be able to be part of that solution. What was the response maybe after you got done with this internally at your firm, Zach? I think it helped solidify the value that you bring too with your team across multiple disciplines. Can you talk a little bit about that?
Yeah, I mean, obviously numbers like this get talked about internally, and we do have 2,500 employees. So we're excited for the future, using true case studies. And estate planning is so crucial. We at Eide Bailly have our own estate planning team, and it's putting insurance on the map. Oftentimes CPAs will overlook it. It's putting insurance as an option. It's true leverage. Some people look at the internal rates of return and like them, some don't. But in the end, it's mostly guaranteed, and it's peace of mind. It's something that people don't have to worry about. So we're excited for the future.
Well, great. Well, I wanted to say that it was a lot of fun to be a part of this case, to see all the different moving parts and everything else that we had available to to bring to the table. I'm trying to unshare my screen. I don't know if I'm being successful or not. I don't know, Danielle, if you can help me with that. I can't see the chat, so
you are still sharing your screen.
There we
now
go.
You're done.
Okay. All right. Now I can see the chat box. I apologize there. Technical. Do we have any questions that came up from that? All right. Well, Brendan, we always have a drawing for some coffee with for our winner gift card. Would you pick a number between 1 and 29, 1 and 26? Or Zach? I'm sorry.
I was gonna say I was gonna pick it. I just had to unmute.
I just heard your voice. Zach, would you pick a number between 1 and 26?
Since the Vikings running back just changed his number to this, he becomes the second best player behind the legend Brett Favre in Vikings history. So I'm going to pick 4.
Number 4. Number 4. Who's the winner? Mike Hamilton is today's winner. Congrats, Mike. We will be in touch with you to get you that gift card. Enjoy a cup of brew as you think about some of the concepts here. If there's any questions, please chat them or unmute yourself. But we're really thankful, Zach, to be able to showcase in our advisor series a very successful opportunity that you were able to bring home and really add value. And we're so glad that I think the learnings here of being part of a team, that we can all work together and really accomplish great things together. So appreciate you and Bailey and joining us today and sharing.
Yep. Thank you for your help with everything. I appreciate it. Thanks for having me.
All right. Well, that wraps up our brew. We look forward to next week, where we'll bring you another riveting topic. And I think we're going to be talking about deferred compensation planning next week. So look forward to it.